Hi, welcome to Money Confidence. I'm Crystal Oculee. I'm the Chief Financial Strategist here at Confidence Wealth. And every week I try to bring a topic to you that's timely and what a lot of my meetings and conversations have been about. So this week I wanted to talk to you a little bit, and you've heard me talk about this subject plenty of times, Roth conversion. So you have to remember that Roth conversions are not something you can do next year before April. You have to actually look at all your conversions and anything you want to do before the end of the year. So it has to all be done before December 31st. Now, also, unfortunately, you can't just pick up the phone to your whoever, the money's held at and make that decision happen the last couple of weeks of December. A lot of those companies have a deadline. Some of them have it beginning of December. Some of them have it by the middle of November. Believe it or not, some of them in the beginning of November because of the amount of conversions that get done. So you really want to be timely in this manner. So the reason I'm bringing this up is this is the opportunity where you want to take a look and say, do I want to convert anything that I have in my pre-tax dollars into a Roth IRA? So just a little reminder, IRA or pre-tax 401k or any money that you have saved previously that you haven't paid taxes on is growing. And at some point, when you turn on what's called your required minimum distribution, which is at age 72 as of now, that could change, but for now it's 72, that amount of money, depending on the total of all of your qualified monies, which are again combination of 401k, 403b, IRA, any basically retirement funds, that is the percentage you would have to take out. So whether you need the money or not, at that point, you will be taking that money out. So a lot of times, a lot of families that we speak with look at the cash flow of what they really need at that time. And sometimes they don't need as much. And sometimes it's really about the fact that they're concerned that taxes are going to go up in the future. So then they're looking to take a portion every year out of their pre-tax dollars, pay the taxes now based on the taxes they know. The enemy you know is better than the enemy you don't know tomorrow. And that way they can start putting that portion into that Roth IRA conversion and allowing that to grow. So then they can utilize that in the much, much later years of their retirement when needed, or possibly even pass it on to their children. So with that said, one of the strategies that's an easy way is fill up the bucket strategy that I wanted to bring up to you today. So what that means is you're going to take a look at where you are at when it comes to your tax bracket, and then you're going to see how much can I fill up to stay within the same tax bracket and convert. So let me show you a visual to make it easy for you. Here we go. So here is what's filling up the tax bracket. So I'm looking at like married filing jointly in this example. So let's say you are in the 22% tax bracket. So if you're in the 22% tax bracket, to go to the 24% tax bracket is not very much. So if you wanted to stay within the 22 tax bracket, what you would do is you're going to take a look and say, let's say your income between you and your husband is $150,000. Well, you see the threshold here is 172. So 172 minus 150 allows you the difference, right? The 22,000 that you can convert staying within the 22% tax bracket. Now, if you didn't mind going up to the 24% tax bracket, you can see your threshold becomes much higher. So now you can actually convert anything from, in this example, the person that was in 150 minus 339. That's the difference that they can go ahead and convert staying within the same tax bracket. Now, let's say you were in the 24% tax bracket and your income between you and your husband was $200,000. So again, 339 minus 200, that allows you to have 139,000 to convert to stay within the tax bracket. You also want to be very careful because you don't want to be kicked off accidentally by even $1,000 extra to the 32% tax bracket. So that's the reason why you really want to have these conversations in advance and make sure that you know what's the amount that you can convert and do it before the end of the year. So you don't want to wait to look at this filling the bucket strategy when it's already too late and you can't do anything about it. So that's why being proactive is really important. So if you're looking at this and going, you know what, Crystal, I know we talked about conversions, but I really want to look at it. Maybe we talked about it at the beginning of the year. You want to talk about it a little further, reach out to your team. So these are current clients, existing clients. Feel free to reach out to your team and start having these conversations now, not later. So then that way there is plenty of time to do the conversion if needed, especially going back and forth and talking to your CPA and so forth. Now, if you are watching this and you're friends and family of our clients and no one's ever talked to you about Roth conversions and you want to see if it makes sense in your situation and running different scenarios and numbers, feel free to do that. As one of the services we have for our current clients are being able to set up some stress testing and some complementary planning sessions for some of their friends and family. So you can go ahead and tell our clients and they can reach out to us and do an introduction and do that. In the meantime, really important, again, current clients, make sure you're looking at fill up the tax bracket and go, do I need to fill it a little bit further? Do I want to have some money go into that conversion? And really understand that this is the time to start talking to your team about and not waiting when it's too late. Because I promise you, I've seen this happen all the time. I have clients last minute in December running, trying to do this. And I'm always sending these video reminders saying, we want to start talking about this now. I know I sent one a couple of months ago. I'm sending one now. I'm sure I'll be sending you another one later. But I thought it was really good for you to see this fill up the tax bracket. In a sense, fill up that bucket. Of course, if you're single, look at the single bracket, look at 2022 tax brackets, and then you'll understand where you fall, and married and so forth. Just look at the right one for you. If you need help figuring out what to be looking at, also reach out to your team. So that's it. Until next time, happy Roth conversion